Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Sunday, February 23rd. We're going to take a look at NIO today. So we've been looking at NIO a lot recently, and it is one of the more interesting tickers, in my opinion, at the moment. It's trying really hard to make some moves outside of this downtrend resistance that it's been caught under since October of 2024. It tested and tried to break through it once, twice, three times, four times, sort of on the fifth or sixth time here. It has broken through. It's the first time that we've seen that since this started taking place, and it started to interact with some of the levels that we have here in purple. Purple levels are the fib levels, and the blue levels are the more traditional like support resistance levels based off of previous price action. So purple is sort of like particular to this swing, and blue is kind of taking into account all of NIO's price history. But we do see, in the last few days, it was wrestling with that 436, was able to overcome that, gapped up in the pre-market on Friday, and tried to hold over that 455, but basically just ended up wrestling with it a bit, flipped it to resistance, and then came down and nearly filled that gap that it left in the pre-market, or I guess in the after hours, that then flipped over to the pre-market. No gap left here on the daily. That was just on the 10-minute. But if we can get some run room up here, obviously this is a sticky zone, right? So we might want to reassess if it does start to put some price action in up here, exactly what levels might get kind of sticky. My concern there is just that it gets very cluttered very quickly because there's so much sort of price action just in and around that range. So one side of me wants to say, you know what, like that approach to 5, it's just really sticky from like 450 to 5, and just know that maybe the buyers and sellers have been exhausted to some degree. I should say buyers or sellers have been exhausted to some degree in this range, and maybe it'll move smoothly this time. But recent history has shown that that's just a really sticky area all the way up to this 536. You see that encompasses then that like $5 to 536 level. That's this stickiness here, and this stickiness here for that matter. And then there might be some smoother run room like we saw here. It really shot up. Now, the challenge with thin zones is it can move quickly up through them if it's coming from below, but once it hits that resistance point, here it was 771, it can fall equally as fast, oftentimes faster, down through those thin zones. So that's something to maybe keep in mind. But the motion for now, at least, if we don't get too worried about like what's that approach to 5 look like and things that are still a little bit far off in the distance, we just look, okay, where are we right now? We are 4 candles out of a downtrend resistance. We had a gap that was left here when it did gap up to get out of there. The high of this day was 429. This filled down to 430. So it's a penny shy of filling this gap. So we'll see if that comes to matter at all. But if it can hold 455 and get some motion up, toward 5, then we can sort of start to reassess what this sticky zone looks like. But for the time being, to me, the most important thing is still continuing to get distance, even if it's sideways lateral distance from this downtrend resistance, and continuing to build on, wrestling with this 455 level, as opposed to coming down and needing to retest too many more times this 436. See, 436 got bought up 4 candles in a row here, and of course then my worry becomes if the price continues to come back to that level, at what point are the buyers no longer there, and then that level gives way. but it is for the time being, if it continue to put pressure upward, right, which is what it's been doing, all these levels, even though they found support off of 436, they also found resistance just shy of that 455. And what did we see on Friday? We saw the folks who were willing to sell there, or who wanted to sell there, had been to some degree exhausted, and it was able to move through there. Now, it was relatively brief, like we said, because then there were a lot of folks who were willing to sell in the 460s, and that pushed it back down. But we are at the moment seeing it get bought up at this level, and the sellers get progressively exhausted at higher and higher levels. And again, these things aren't crystal balls. It's not to say smooth sailing. It's not to say it's all going to reverse and, it's going to look great for NIO. It's just to say this is my assessment of what's happening in the moment. You can totally disagree, and that's very much fine. Now, the other key component of this is, if you've watched any of my EMA videos on my playlist that's called Trading and Investing Mini Courses or something like that, this is my favorite setup. This, with the EMAs, the short-term EMAs starting to cross over, with the 183, which is my long-term EMA, within striking distance. This is my favorite. Now, oftentimes when that happens, even if you get the crossover here, unless there's like a major catalyst, something major helping to move the stock through, it can either reject off of it really hard, like you saw here, or what I would more look for is like a motion above it with the candles, and then it to come back down and test, and maybe even lose it a little bit, and then make another attempt. So to me, if it gets to and even through that 183, again, unless it's a little bit of an anomaly, unless it's a little bit of some sort of other catalyst coming in to really push the stock upward, I would almost expect a push through, and then a short-term, or potentially a short-term failure, at least a short-term failure that could turn into a long-term failure, but a short-term failure that has the potential to recover, make a second attempt, and then push through. So we'll see when we get there. Again, we're that's speaking too far ahead. For now, all that I'm looking for is we have bullish crossover now. The 8 is just barely, but it has bullishly crossed over each of the other EMAs. We see here it's like it's a fraction of a penny above the 34 EMA, and it is a few pennies above the 21. So the next thing would be, if we can get continuous decent price action, that 21 getting dragged above the 34, then all of the EMAs, the short-term EMAs, are in a bullish formation, headed for a collision course with the 183 EMA, and that's situated right now, in the sort of brunt of that sticky zone that we were just talking about, situated right now at 493. That will continue to come down a little bit probably, and but it will still be in the high fours if this does make a move toward it relatively soon. So right in the midst of that sticky zone is where it's going to encounter that EMA. All the more likely then that it's going to prove out to be a very, very sticky zone. Shelving wise, there is a pretty big sort of potential sell wall to get through here. If it can get into the low 470s, EMA pending, of course, right? That 183 is looming up here. It does have a much thinner, it might have some run room there into 490, and then that's where the shelving picks up a little bit again relative to the surrounding shelving. It's decent, this shelving below is much stronger, if you will, stronger and longer. But it may hit some sell walls up here again. That's what we were talking about with the levels, stickiness. The EMA is there. There's a lot of potential sell volume in that range, and that can be okay, because if it can flip those levels, then strong resistance becomes strong support, or at least that's the saying. Nothing is 100%. Now, some large-scale orders coming out, nothing like tremendously huge in this whole area, single-digit large-scale orders coming out. So To me, nothing tremendous. Still a bunch of folks underwater. Plenty of opportunity if folks do end up wanting to dollar cost average down. If they do start to see what they what they feel is a glimmer of hope in NIO, maybe they look at it as an opportunity. Dollar cost average down. Try to claw some of it back. Only 33% of folks right now profitable as far as the Webull info that we just saw. So yeah, we'll see. I mean, there's plenty of decent factors here. It's just a matter of can it hold. Short interest kind of holding steady to even maybe a little bit down from where it had been, though they're holding a little bit. It's mid-range to high. Sort of weird. It's like mid-range to high in the hold. It's sort of mid-range to low on the quantity. So yeah, it's sort of a mixed bag there. But yeah, to me, that's looking pretty. Is the best opportunity it's had in months, right? So I guess we could say that at least. Obviously, it got the zoomies here in September, right? But then that all crumbled, and like I said, it in October it was putting in this downtrend resistance. So about a month of a month of fun, and then back to the basement. And now, since then, this is the best opportunity for it to go. It doesn't mean it's going to go. I'm not trying to guarantee a thing. I know I keep giving a bunch of disclaimers here, but people get all weird and wacky and think that things are guaranteed, and yeah. But I can't do anything other than to say, look, these are signs and signals. I'm trying to explain why, but nothing is guaranteed. Even if you have the best setup in the world, those can also fail. Nothing is 100%. So here, think or swim study. What's most interesting to me on this, of course, is the retrigger happening on the TTM squeeze indicator. I say retrigger because we had this lengthy trigger here, and it fired and nothing really happened. So then I call this the retrigger. We do oftentimes see a retrigger and a refire set off a big move. We see it happened back here. Lengthy trigger, fire, nothing really happened. Retrigger, brief retrigger, fire, that's where that motion set off. So if you had caught the retrigger and refire, you could have bought at about 4.25 or so, and it would have brought you up into the sevens in a really short period of time. So you could have been darn close to doubling your money in a really short period of time. And if you held it too long, right, if you miss your sell signal, it will always negate and oftentimes much more than the gains that you had. So keep that in mind. Holding too long is often the curse. So yeah, that's the most interesting to me, this retrigger. When that fires, where does it go? Keep in mind, again, this is not meant to be a disclaimer, this is just true. TTM squeeze indicator is looking for an outsized move. And when it fires, that's the goal. So now that we're in a retrigger and looking for the refire to happen, it's just looking for an outsized move that can come to the upside. Great if you're a bull. But outsized move, it can also come to the downside. It can be a tremendously harsh fall. It can be a huge pullback. And I don't know that I have a great example here. Maybe this. It fired here. Yeah, it fired here at 5. In the vast scheme of things, it looks not so impressive, but it fired here close to 5, and it drew it down again in a relatively short period of time, almost to 3.5. So you were feeling the pain on that one if you got caught in that downward trigger and fire. But if it does express through any of these levels, we're pretty late in February now. If we take the March levels into account, they're pretty on par. But if it gets through the call trigger for March, that is at 511, has a +1 ATR up to 728. On the flip side, the put trigger is down at 377 with a -1 ATR all the way down to 160. So that's huge range, right? But that's sort of on the backs of this being a few months in the past. This really opened up the volatility range, and so you're going to have huge ranges there, covering ground from $1.60 up to 728 just over the span of a month. It having the possibility to go both of those ranges. So we'll see. All right, folks. Well, I hope that you are having a nice weekend and that you have a great trading week ahead. And as always, I appreciate you watching, and I will see you in the next video.